Hello traders, 'tis I, TheRumpledOne, coming to you on Wednesday, October the 22nd. The year is 2025. Let's talk trading. You are human. These videos are for educational purposes only. Your results may differ from mine. And since you are human, always have your risk management in place so you don't lose more on any one single trade than you're willing to lose, or during any one trading session. So you are human. And the reason why I picked that for a topic is because yesterday, I mentioned about, well, if you got these systems and they're simple, you can program them. But since we don't program them, not only do we have to account for the fluctuations in the market, we have to account for the fact that we're going to make mistakes. We're prone to errors because we're human. Now, I'm not telling you anything new here, am I? But it's sometimes things are so obvious that they're forgotten. They're not, you don't pay attention to them. And it's like, oh shoot, I should have remembered this or that. Because, with trading, let's think about it. We're in the year 2025, and that laptop or cell phone that you're using or tablet to trade, you've got more compute power. It wasn't even conceivable, say, back in the 1920s and 30s, or even before then when the stock markets first came to be. They didn't have online interactive charts. I mean, so it's the tools we have are pretty much off the hook. I mean, when you look at the history of trading, I mean, we've just got things that Darvis never dreamed of, or any of those other, traders who made millions. So, and the thing is, those traders, some of them wrote books or they had books written about them. And, all of the principles and the techniques and the fundamentals, they're all there in writing and we can read and learn. We don't have to reinvent the wheel, even though we're prone to do it. And that's another human error. Or tendency. So, we've got that. We have the process of trading. But the thing is, we're human. So, what do we do to mess up? Well, a lot of times we're not focused. Our attention is diverted. A lot of times, we trade without a plan. We don't actually plan the trade. We might have a trading plan, but do we actually plan the trade? There's a slight difference. Because you could have a trading plan, that specifies your risk and your entries and things of that nature. But once again, because we're human, we don't necessarily plan each and every trade, because we're getting a trade and we don't say, well, this trade, let's go for 5 pips, and then the next trade, well, let's only go for 3 or whatever. Like this morning, I got in a trade, and it was like it's something I saw in the chart. And let's see, let's go to the chart here. It was something that I saw in the chart. Once again, we've got these squiggly lines here. And what I saw in the chart was, I saw this yesterday, so I was kind of putting it into practice today. Right here, that's the bottom, that's the lowest value for indicator 2. And so I looked to the left and I saw price had dropped to this level, but it didn't close below it. So on the next candle, I went long. And then I think maybe I was down not even half a pip when I entered the trade, and it just started going up. It was the opposite. I was Mr. Inflection, but to my benefit rather than to my detriment. So it went up, and I was up about 3.5, almost 4 pips. And I said, you know what? If this drops down and I only have back to 2 pips, I'm just going to get out because you can probably see here M30 was red, and I really don't like trading against M30, but the second half of M, which means there's the second half of M30. So, and that was green because that was the 15 minutes. So it's like, okay, I can go with the 15 minute for a while, but it dropped back down almost to, I think, the open of the 15 minute. I can't remember for sure. But anyway, I was out for 2 pips. Well, had I not gotten out, you see where price ran up to. And then here, it kind of did just the opposite, or it didn't do what I was looking for in this particular instance, which was right here. That was the highest indicator 2 for M5, but you see we had a close above it. So since we had that close above it, I didn't take the short, but when it dropped below it, it fell right back down, good for, maybe 14, 15 pips. So that was just something that I saw, but because that really wasn't, it didn't fit my particular trading plan, it's like, no, I'm not going to take that trade. Not my trade, somebody else's trade. So, I overcame a human tendency. Now down here, had I said, you know what, I'm going to stick with it until it closes below the M1 indicator 2, or something else, like if it got up this zone and fell down, I could have captured a lot more, but I wasn't in that mode. So, and it was the first time trying it out, so I wanted to be a little on the risk adverse side rather than be on the risk side. So that's another reason, is that we don't really plan the trade, or sometimes traders don't really plan the trade like they're supposed to. And the biggest thing of all is failing to manage the emotions, because we're human and we're dealing with money. And that's like throwing gasoline on a fire. People can get pretty hot-headed, just in life. But now you come to trading, if you're a hothead in life, chances are you're going to be a hothead in trading. Things tick you off in life, things are going to tick you off in trading. And when you throw money into it, it's just going to exacerbate it. It's going to make it worse, make it feel worse. It's really going to mess with your mind. And so, that being said, what do? Well, you have to, get in front of the mirror and be honest with yourself and say, okay, these are my weak points. And then one by one eliminate them. Because as Munger would say, it's better, to, don't do stupid stuff than trying to do clever stuff. Just avoid the stupid. I think I did a video with that as a title, just avoid the stupid. Avoid the stupid mistakes that you're prone to make. And first you have to admit them. It's like there's a whole list of stupid mistakes. Maybe I should just make a huge list and we could go through them. But I think over the course of, over a decade of videos, I think I've probably talked about most of them. There might be one or two I missed. But you just look at that list, stupid mistakes, and see which ones you make. I talked about focus. If you're distracted, then what you have to do is you have to put things out there, like a stop loss and a take profit. So when you're distracted, if one of those lines are hit, one of those levels are hit, you get out of the trade. So, for example, I was messing around yesterday and I was distracted and I had gone short and it went against me. I took a second short, it went against me. I took a third short and then it started that third short. I don't think it was too much drawdown, but I got distracted and I was looking at something else on the internet. I wasn't focused on the trading screen. And lo and behold, I could have gotten out of all of those trades, each one profitable, but I wasn't paying attention, you know. And so when I came back to the screen, it was like, oh man, I missed an exit. So I put the TP on where I should have put it on before I was distracted, and then it came back. I was saying it'll come back, but that was a hope. That wasn't a planned trade. I did not plan the trade. So that's just one of the things that as traders we have to look at. So, just remember we're human. We're prone to mistakes. We're prone to not seeing certain things. And then sometimes we see things and we make up a story. And I'm wondering why price isn't moving. Now, it sounds like my internet. There we go. I'm not sure why. My internet's acting flaky here. There we go. And let's see, it seems like H4 is oscillating. The H4 candle, because it was top of the hour right here. This M30 is showing now we're back to red on H4. You see we had a flip-flop box. But you see this is a high, this is a relative low. We're kind of in the middle. It's kind of no man's land. But we are at the H4 open. So we know H4 has the range. It just has to. So, fellow traders, I'd be curious if anybody's willing to admit their mistakes in a reply to the video. And so maybe another fellow trader could go, okay, yeah, I do that too. So if you traders would open up and post one of your mistakes that you have, you make on a recurring basis that you know you shouldn't, you might just help a fellow trader out. So, fellow traders, as always, when you're trading, remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.